Happy Monday and welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. I am looking forward to getting some big tech predictions from former Cisco CEO John Chambers. John is always on the mark with his big calls. That chat is just moments away. Here's what's on my mind today, though. Netflix begins to make its case for Warner Brothers with a new twist. Netflix co-CEO Ted Sarandos met with President Trump ahead of going public with his $72 billion deal for Warner Bros. Trump said Sunday the deal could be a problem because of the amount of market share the resulting company would have. Jefferies is out this morning saying the deal muddies up the near-term investment case for Netflix. Makes sense to me. The investment bank thinks the stock could tread water as it aims to close its biggest transaction ever. Not helping matters for Netflix. Paramount out this morning with a hostile bid for all of Warner Brothers, just not the studio's business that Netflix wants. This one is going to be fascinating to watch. And no rest for the AI trade with earnings out this week from Oracle and Broadcom. No disrespect to outspoken Broadcom CEO Hock Tan. Oracle is the most important report here, and the market is saying as much. Oracle shares are down 34% over the past few months, while Broadcom is only down 3% from its all-time high hit recently. The market is concerned about the debt Oracle will need to fund its $455 billion backlog. It's a huge number, but for the Oracle haters, and they are out there, Guggenheim analyst John DiFucci says this today, quote, "We do not believe Oracle will experience dire financial situations, and we expect Oracle debt will remain investment grade." And I just want to toss this bone out there because it broke today as I was preparing for the show. Hat tip to JP Morgan CEO Jamie Dimon for stealing top Berkshire Hathaway stock picker Todd Combs. This is a good reminder of two things. One, there really aren't any friends in business, like none. And two, life for Berkshire after Buffett retires at year-end will be quite different. So lots to get to on this Monday morning. On the Opening Bid Roundtable, Tim Urbinowitz, Innovator Capital Management Chief Investment Strategist, Noel Atchison, author of the Crypto is Macro Now Substack, and Yahoo Finance senior reporter Brooke DePalma. Brooke, I got to start on this Netflix deal. Paramount out of the block here. We are in a good old-fashioned bidding war.
We absolutely are, Brian, and heading into, this is all you heard over the weekend, so heading into this Monday now, Paramount adding another layer to this already well-discussed bid that Netflix had put on the table on Friday. Now, what we're hearing at this open is Paramount offering an all-cash deal of $30 per share to acquire all of Warner Brothers, not just the key Warner Brothers film IP division, but instead this would include all of the subsets that Warner Brothers has to offer, including CNN, including Food Network, as well as its other more TV enterprise business. Now, keep in mind that compares to Netflix proposed deal of about $27.75, a mix of both cash and stock. And so this all-cash offer definitely now something on the table, especially after we heard from President Trump over the weekend that Netflix acquiring Warner Brothers would really increase its market share substantially. And we've heard key concerns over what this would mean for regulatory risk.
Tim, good morning to you. The personalities here, Ted Sarandos, the kingmaker in Hollywood. You got David Zaslav over there. Everybody seems to be getting paid. You got Larry Ellison backing his son's bid for this company. Let me just focus in on Netflix for a second. Is there any interest in, if you are long Netflix, do you stay long on this, or is this just dead money now as they are going to war with Paramount?
Well, Brian, I think this raises a lot of question marks for us on Netflix. Clearly, it's good for Warner Brothers shareholders. You look at the pop that we saw Friday, what we saw on Monday. Clearly, this is a good thing here. But when we look at Netflix, I think what was very interesting, Brian, is if you look at the president's comments about this deal, it was not favorable. And I think it really, draws back to the fact that he doesn't want prices going up for consumers. That's a very politically sensitive topic. And for us, that's really a big question mark is what is Netflix going to do here? How are they going to be able to increase prices, increase margins? I just don't see it, Brian. It's not something that would excite me as a Netflix shareholder, but obviously others have different opinions.
Tim, this is I'm reading these statements to what Netflix put out last week, what Paramount put out, and my take is, this is all BS. Of course prices are going up. You mean to tell me if Paramount spends this amount of money to buy Warner Brothers, what, my cable bill is going to suddenly get cheaper?
It's not getting cheaper, Brian. The prices are definitely going up somehow, some way. And again, I think that's where really the president's sensitivity comes in. And this is coming at a time, Brian, where you have consumers that have been stretched over the last couple of years. You know, they're nickel and dimed on all these different networks for different services. This is not something that is good for consumers. It's not something, again, that's politically positive for the president. There's a lot of stress on, hey, these prices have continued to go up. So we think that that's a little bit of a wrench in this deal. But again, Brian, you take a step back, where is the breaking point for consumers on that? Netflix is pretty close as is. You can't really push prices up much higher than they're at now, which gives a little skepticism on this deal.
Brooke, let me get back to you because Netflix is now in an interesting spot. How could they not come out here and raise their offer? And then secondarily, now they're going up against a company in Paramount with Larry Ellison, who's worth $270 billion. He has a bottomless checkbook. There's no end in sight how much he could bid here.
I think what's really interesting is we're hearing where exactly this would put Netflix in the competition of streaming services. Of course, Netflix was really the front runner, really sort of paved the path for all these other players to get in the game later on after Netflix really sort of made the way for what we know as streaming services now. And it was interesting, Needham, in a note on Friday, Laura Martin there, said that this sort of puts Netflix to be able to compete against Google's YouTube, against Amazon's Prime Video, to really compete with big tech. Now, of course, this other offer wasn't on the table at the time that they did agree. Of course, we've heard concerns from Paramount that they're really still looking. They say this is unfair of Warner Brothers to go along with Netflix. And so we've been hearing about this, but certainly the valuation that now Paramount has offered to compete with Netflix is something that already was increased, or rather faced scrutiny among the street as well. And Laura Martin putting in her note that Netflix overpaid if viewed over a 1 to 3 year time frame, but this is an asset that redefines Netflix for the next 2 decades. And so now, really, what is that amount that Netflix needs to come with in order to acquire Warner Brothers, and what also will the street think of that valuation?
No, I'll just try to make a little joke here, but none of these companies have crypto on the balance sheet.
More the pity, right? But then again, that's a whole separate story that much of the crypto market is suffering from. The number of companies that have used crypto to boost their share price never has ended well, probably never will.
Before I came on, Noel, there was a good post out there on X. I believe that Michael Saylor has come out and bought $1 billion worth of Bitcoin. What's the signal you think he's trying to send to market? Of course, Michael Saylor, very bullish, always on Bitcoin and crypto, but how does the crypto market take that at a time where prices, they have stabilized, but things are still volatile out there?
Things are volatile. I would say they're muted as well, and there are many factors behind that. Michael Saylor's move comes after there were many concerns floating around on X that, hey, he's not buying what's going on here, because we're so used to counting on that steady buying force in the market. We have to remember now, though, Brian, that he is just one of many digital asset treasuries, the largest easily, but others have pretty much stepped back, and some of them are even selling. So while he is an important force, he's no longer the only one, and there are offsetting factors.
Tim, Fed comes out this week, cuts rates by 25 basis points as people expect. Is it Bitcoin back to record highs?
Well, Brian, I think it raises a lot of questions for various different asset classes. And one of the things that we're really focused in on right now is who's going to be the president's pick for Fed chair next year. I can tell you one thing, they're going to be more dovish than Jay Powell was. And I think that has ramifications across many different asset classes. For Bitcoin, we would view it as a positive. We think this spooks, the same narratives that we've seen spooked all year long. And we also think it's a boon for different asset classes like small caps, and even a broadening out in the S&P 500. Lower rates, we think, can be a catalyst to help propel small caps forward. We think it can also help stocks outside of the Mag 7 really start to accelerate their earnings. So we're preparing for a more dovish Fed next year for more rate cuts, and we think that has ramifications for small caps, and we also think it's bullish for Bitcoin.
You think the lows are in for Bitcoin for this year?
It's tough to say, Brian, but one of the things that we've noticed this year, and really over the last several years, is you're seeing this asset class mature, right? Volatility is starting to come down. Even in a year what we would consider to be more of a crypto winter, right, this year, you're seeing volatility come down. And I think that is just a different phase that we're heading into. And broadly speaking, Brian, we definitely think this opens up more pockets for various investor types to really get involved and really drive the price higher. So, you've seen these drawdowns before. 30% drawdowns are nothing new for the asset class, but we think we're heading into a new era, which is really going to open up new pockets for different capital that didn't exist before.
Brooke, over to you. Big week for Larry Ellison. Now you have this Paramount deal. David Ellison, his son, is in the mix with that. And then, his company Oracle is reporting earnings. And Oracle has been under pressure, Brooke. It's interesting because initially they're almost $500 billion in backlog, AI-related. A couple months ago, I believe it was early September, was cheered by the market. But since then, all these concerns have piled on Oracle stock regarding how are they going to service that backlog. And they're going to have to raise a lot of debt, and the market remains worried.
Brian, heading into this report, Oracle stock is down about 13% over the last month alone. And really, heading into the report, this has been the poster child for concerns around what you say, this AI buzz, this data spend. And so really, Oracle needs to show up and really prove itself to the street when it comes to that future outlook. I was reading some notes out this morning, Deutsche Bank saying that it needs to show its confidence in the long-term prospects of not only Oracle, but it's also its large AI customers. Keep in mind, those include Meta, OpenAI, as well as Anthropic, some of the key players that we discussed within this AI demand ramping up. In addition to that, they also said that they need to produce strong financial results, provide aggressive guidance on future orders, and really acknowledge the ramp up in CapEx spend. There's a lot that Oracle needs to prove within this report in order to maintain that confidence among investors.
Noel, let me get over to you. How important is a report like Oracle to the crypto community? Of course, Oracle really a lot of focus on NVIDIA and other names in tech, but this company's at the epicenter of one of the hottest trades out there in the entire market, AI. And if they don't report, how would that even be good for sentiment on a crypto or a risky asset like that?
It would not be good at all. Crypto is very tied to equity sentiment, especially around the AI spending. And if we get a correction, we can be pretty sure crypto is going to head down short term. But that said, I totally agree. The longer term thesis is looking up because of the currency debasement we have coming ahead with fiscal spending increasing pretty much everywhere. But short term, there's a lot of risk in the market. It's not just the AI spendings. It's also the rate of decline of U.S. interest rates. We'll get a lot more this week, as you pointed out earlier, in the updated economic projections. But we also do have to remember, Brian, that crypto is a global market, and there are increasing signs that the global easing cycle is shuddering to a halt. This could also affect risk asset sentiment, especially crypto, the global market, in the short term.
Lastly, Tim, I'm sure you've seen this Ed Yardeni call this morning, sounding a little more bearish on the Mag 7. I do not agree with this. I think key to his call is that there's going to be more competition in AI. I don't see it. I mean, I look at what Google's doing. Good luck trying to start a business to take on that company.
Yeah, Brian, I'm 100% with you there. I mean, again, the AI trade, as you know, we've discussed many times. We think this is a trade you keep your foot down on the gas pedal. That means the Mag 7 in a big way. I do think, again, if you look at the earnings backdrop and with rate cuts coming, I do think you can see a broadening out beyond just the Mag 7. Our anticipation is that you are going to see that next year, but that does not by any stretch of the imagination mean that you're going to see the Mag 7 fall. I do think you're seeing some dispersion there, and there's definitely names within that basket that we think are much better positioned than others. Google being one of those at the top of the list, very well positioned for this AI trade moving forward. And then others, you look at Tesla, we always have concerns on the valuation there and just what the future looks like, but absolutely not. Broadening out, but not necessarily anything negative on the AI Mag 7 trade.
All right, big thanks to my opening bid roundtable, Tim, Noel, and Brooke. Thank you so much. Have a good week. Coming up, former Cisco CEO John Chambers makes his return to opening bid, and he is coming with a holiday gift for you all. Some top tech predictions for 2026. We'll be right back. All right, two words have dominated the AI trade in recent weeks: circular financing. It's a fancy way of saying OpenAI is at the core of most big AI deals. That means the pressure is on them to deliver on their bold ambitions, or it could put many tech companies at risk. Today, my Power Player segment is John Chambers, JC2 Ventures founder and CEO. He's also the former longtime Cisco CEO. John, good to see you. Always a treat. It's been a while. Welcome back. So let's start. All these players in the tech industry. I want to start with Oracle for a second because they report earnings. You know this company. You remember them from decades ago when you were competing with them in some capacity. How important is an earnings report from an Oracle at this stage in the AI trade?
So, Brian, first of all, it's good to see you. A little bit of report before we jump right in. I miss being on your show and look forward to seeing you in New York. In terms of the major players, whether it's the Magnificent Seven your prior guests talk about, or Oracle, Broadcom, obviously I'm not referring to the quarter at all. I tend to think for the year and 2 years out. I've learned a couple lessons. You never bet against the Fed. If it's lowering rates, you're probably going to see an up market. And don't bet against Larry Ellison or Hawk. And both of them, I think, are tremendous leaders. In terms of the players I love in this area, I like what Google's doing, and probably they've improved the most in the last 6 months on their hand. And then Microsoft, Satya's doing an amazing job. And then I like Lisa at AMD in terms of that group that I think are really making a difference there. But indications of what you just said, I would not look at one company as the bellwether. In the internet, that was fine, where Cisco had 50 or 60% of the business, and we often had the vast majority of every product category. But if you watch what's going on today, whether it's in semiconductors, whether it's in the software, the models, etc., you'll probably see a couple of the Magnificent Seven stumble over the next year or two. And I hope the market doesn't overreact to that. I think you need to look at the balance of the group. The balance will be up. But I think whether it's the Magnificent Seven or startups, you're going to see that mid-level group, several of them fall out at a fairly rapid pace, especially some of the smaller companies.
Who do you think stumbles, John?
The ones that I like to bet on Microsoft and Google. I think they're positioned well in terms of it. NVIDIA, Jensen's a machine. So those would probably be my three that I like the best.
I have never seen a backlog like Larry Ellison has at Oracle. I think it was $455 billion. But the stock has been under pressure because of fears that they can't actually service that amount. If you were the CEO of a top of one of these large AI companies right now, John, how would you finance some of these big deals?
Well, I think the money's there as long as the market sees it. Financing in today's world, the market, if they really believe in your strategy and the implications of it, the financing's there, and that includes for venture capital and startups. Financing, if you haven't got a good plan or concern, it can be a little bit more challenging. But the AI play, I believe, is real. I do not believe it's a bubble. I think there will be people that trip within that, and there'll be some train wrecks. But the AI play, we're just getting started on. I think 2026 will be a great year for AI. Productivity will grow faster than almost anybody realizes. I think the market's underestimating that on earnings. And I think many of the CEOs are just getting started on how they're going to use AI in a major way. It doesn't matter whether you're in retail like a Walmart, or an automotive like a Ford, or in healthcare or government. You're seeing AI benefits start to occur real rapidly. It used to be just in coding and customer service. Now it goes across all functions. So I think this is a decade-long phenomena, and I like the play of taking the top players, bundling them together. I personally like the hot startups, the companies I've been fortunate enough to be associated with, very much like what KR is doing at Bloom Energy, or what Bipple is doing at Rubrik.
Yeah, I just talked to Bipple last week. I mean, another big quarter from them, big IPO too. What, everything I've heard the past month, John, everybody's been so enthused with Gemini 3. And look, I mean, it's a powerful model. What Google has done over there has been tremendous. But is the market now underestimating the potential for OpenAI? And this company has huge, lofty ambitions over the next decade. They have a lot of commitments out there. And if they don't deliver, it's just not good for the tech ecosystem.
Well, first of all, I think it's very healthy to have two at least, and you prefer three players in a category. I think both those companies are going to do very well. I've been really impressed at how Google has moved, as I alluded earlier, in the last 6 months. And what you do with OpenAI, I actually did my 10 predictions for this year, and I didn't use any of the AI tools, but I went out and asked the questions on each of the 10. What did ChatGPT say, and what did Gemini say, and the odds of me being accurate on it. And then I said, what is the one or two area on each of the predictions you think that I'm most exposed on? The answers were amazing. So I think you've got two great tools. You're going to see people move back and forth in terms of utilization of them. And I think both of them are going to do fine. But again, just starting to see early innings of what this is going to produce.
Are you concerned that OpenAI is at the core of so many big deals? I mean, you mentioned AMD. I mean, they had a big deal, and OpenAI might be an investor with them looking out over the next 10 years.
Well, if you watch, what I think we've seen this time is normally the large players do not participate in the next generation of market movement. That was true of IBM, mini computers, client servers, the internet, software service, the cloud players. This time it's going to be exception. They're going to be there. And if you watch the model that we did at Cisco in the very early 90s, you do it yourself. You do it through acquisitions. I did 180 acquisitions, or you do it through strategic partnering. So I love the strategic partnering that many of the companies are doing. And actually for my startups, whether it's NVIDIA or whether it's AMD or others, they're investing in the startups because they're driving their own core business, the implications. I think it's a very good strategy. It does show that if one company trips a little bit, it'll affect others. But I think in terms of accelerating the market, it'd be what I would do if I were in their position. And whoever wins the AI battle as a nation and as an industry will lead GDP growth, standard of living, etc. So I think it's a national priority, and I like it a little bit. It would be an understatement. I like their strategy. Do it yourself, acquire, strategically partner, invest. I think it's just smart.
All right, we'll have to leave it there for now. John Chambers, always a treat to get some time with you. Happy holidays to you and yours. Please do let me know when you're in the city.
I will do, and I look forward to being on your show next time. Give me the candid feedback, Brian. It was a joy being with you today.
All right, thank you, my friend. Be safe. I'll talk soon. All right, since I know you all love Opening Bid, I have more of it over on my podcast, Opening Bid Unfiltered. I just dropped a new convo today with Aura CEO Tom Hale, fresh off a capital raise that valued the health tech company at $11 billion. Hale tells me payments could be its next frontier. You can catch that episode on Yahoo Finance, YouTube, Spotify, Apple Music, and Amazon. Straight ahead, Julian Hyman has you covered on Market Catalyst. Don't go anywhere.